Hey guys, Boris Schlossberg. Great to be with you. Welcome to BK Forex Advisor. Please note the following video is for educational purposes only. No claim is made as to the accuracy or efficacy of any trading strategies contained in this video. And as always, do your own research. So I want to come back at the beginning of this month. We're now April 1. We're about half an hour away from NFPs. I'm recording this. And go back to show you my equity curve, which I showed you last week. And I said, you know, the equity curve looks great. I'm really killing it. I'm really feeling the flow of the market. This thing isn't going to last. And of course, I was absolutely right, because I know myself, I know my own trading, I know that it's impossible to maintain this kind of a 45-degree vertical move continuously. But the critical thing that I want to show you is not what happens when you're winning, which is easy. Basically, when you're winning, this is what your equity curve looks like. It's when you run into difficulty, how do you survive? How do you preserve your gains? And although this week was very difficult for me because I made a lot of very dumb, stupid trades, the underlying factor of what I've been doing lately, I think, shows the efficacy of my system, because as you can see, while the equity curve kind of flattened out, it did not give back any significant profits for the month. And in many ways, a push is a win in the market. There are three things you can do in the market. You can make money, you can lose money, or you cannot lose money. And as long as you can do one or two of those things, which is either make money or not lose money, you're going to be ahead of the game. So I want to kind of just look at the reason for why a couple of these trades did not work. Just bear with me. I'm going to pull up my charts. Just hang tight. Okay, I want to show you. This is the euro trading from yesterday, and what happened to me, how I ran into trouble. Basically, as you know, running here, I'm selling myself late. I mean, this is where getting started on the wrong foot can really kind of screw you up as you go through the day. I sell way late into, I believe I forget what the negative news on the euro was at this point. Below the 41.50, this is sort of into the spike lows. Oh, I think this was German retail sales. That's what it was. German retail sales came in really, really horrid. I sort of just wake up, not really thinking through the market. I'm selling the 41.50 level, which is always a good support level, not a great breakthrough level. Remember, I always like to trade to the 50s and to the 00s, not through them, unless I have massive fundamental flow on my side. And of course, I get caught. I get caught on a retrace back and get stuffed out. Fortunately, I'm flexible enough at this point to understand that, hey, you know, clearly, German retail sales not a major factor on the euro. Euro still trading pretty much off of positive risk flows. Early Europe, we had German unemployment numbers come out. I'm doing a lot of sort of putzing around, you know, up, down, but still very much on the long side of the euro all the way through, just taking very short profits back and forth, back and forth. Finally, unemployment data comes out. I establish a position like at around 80, not 75, but 80, but for a run towards the 4,200. And this turns into a classic trade. So far, so good. I'm in good shape. Then we have the Irish data come out. Basically, the fact that the ECB isn't going to support the Irish banks. It turns into a sort of a very negative euro news flow. But here again, I make a huge mistake, because the euro really comes off like about 50 points off this news, right? And the news itself is not so horrid that it has a lot of continuation. I misjudge the intensity of the news, because this whole Irish thing, of course, has been in the news forever. It really has been in many ways factored in. We're still sort of positive flow euro mildly. In other words, the way to trade this properly would have been to sell every retrace, because overall this is a serious negative overhang on the euro. We don't have any other positive news to really drive flow to the upside. So selling the 00s, selling the resistance levels would have been very good. But I make the mistake of selling the 75s, which of course I get stuffed on once, I get stuffed on twice. Fortunately, I'm smart enough to kind of realize that, hey, I should be selling the 42s, and I did capture them back a little bit, and eventually even out my my trading in the euro for the day. But as you can see, it's a perfect example of where I'm just misjudging the intensity of the news, the proper positioning of the news, and misapplying my setup and paying the price for it. I'm just, you know, this happens. This is a obviously going to happen many more times, but at least I understand what's going on. So I want to show you now the much worse trading in the pound. The pound just really decimates me throughout the day, because here again, negative news. Now the story with UK here is we had positive news front end of the evening, and I read that beautifully. I mean, we basically have strong HPI data. I take the 25s to 40s. It's a perfect flow setup. I take another move from 25 to like a small scalp towards the 40s. Another good perfect setup, and then we have negative data come out, which is the sort of news that the Bank of England is basically saying there's tremendous amount of foreclosures, much larger amount of foreclosures in the credit condition survey than the market thought. This really turns sentiment kind of negative on the pound. The pound breaks through the 61 level. And here, I'm finally learning a little bit of my own tricks. It breaks through the 61, trades back to the 61, and now I'm using that, the 00 level, as a resistance point. Now I'm sort of selling into sort of the resistance, and of course that works well. But the problem is, I kind of press my trade. I mean, you know, the news is negative, but how much of the negative news is already factored in? I try to sell the 25s. I don't sell the 50s, which was a huge mistake. I try to sell the 25s twice, thinking that this kind of negative news is going to have more momentum, without realizing, or at least really not paying attention to the fact that, hey, let's take a look at the longer term charts. 25s are like major support ahead of a very, very important psychologically key 160 level. So unless you have data that basically says, you know, UK economy is going to be crashing into a -2% GDP, stuff like that, it's going to be unlikely that the 60 is going to break just on this kind of negative news, having already taken out 150 points of downside action to the thing. Again, I misjudged my my analytics. I should have been selling the 50s. I do sell the 50s a couple of times to kind of even myself out, but still, as you can see, it looks like a St. Valentine's Day massacre. And I continue to stay stubborn, of course. This is the other mistake I make. I continue to stay stubborn into the pound, get stuffed out. Ultimately, I'm able to catch some of this stuff back, really pretty much on pure luck, because this is where Fed officials begin to say hawkish commentary at the end of New York close, and I get the pound back. Now, the last thing I want to show you is I finally organize myself, and I finally control, get back to what I should be doing, which is properly analyzing the market with flow. Post New York, post Chicago PMI, the dollar yen is obviously trading well here at 83.15, and I take it. No, I'm sorry. This is the wrong trade. It was such a long trade. This is what I wanted to show you. Post New York PMI, dollar yen. Yeah. Oh God, bear with me. This is just so long that it took me forever. You know, trades well because Chicago PMI really, is better than expected. It's all positive towards U.S. rates going up. I do my classic run for the 00s. I buy it a little bit higher here at 84 because obviously I can't get the 75 print. But it takes a very, very long time, and finally the market runs through the 8300. I make my classic 00. Then on the New York close, Lacker and the guy from Minneapolis, whose name I cannot pronounce, both come out with very hawkish statement. And this also lends very, very hawkish tenor to dollar yen. And I'm thinking into the Asian session, it's going to continue from 25 to 50. I obviously just take a little bit of the move, but it does continue 25 to 50. I take another classic move. Bottom line is, when I go back to my analytics, when I go back to trading my setup properly, I am able to recover all of my losses from very, very bad trading into a move back up essentially to even. This is the equity curve just for one day. This is the 31st to the 1st, and as you can see, I dip all the way down to 25 basis points negative. And when I finally get my act together, start thinking properly with how I should be trading flow, I collect the pips back. And that is really, I think, the critical thing here, that it's very important to understand the mistakes you're going to be making are going to be primarily your own. They're not going to be the problems of your setup. They're going to be the problems of you misunderstanding and misapplying your setup into the proper market situation. So it's very important to always trade small. Notice that even when I'm bleeding all of this idiotic trading, I'm really bleeding very, very little of my equity. I'm only down, after all of my stupid trading, just 25 basis points for that day. So it allows me, after a few intelligent trades, to recapture most of that profit into the end of the day. So I hope you guys had an interesting insight into what I call the longest pip, because sometimes, when you're very, very close, winning can look very, very far away, and you have to just stay disciplined and attached, and I think properly executing your setup. I'm wishing you guys the best of luck. It's just about NFP time, so I'll hopefully see you guys on Twitter. Of course, this is going to be posted afterwards. We'll see how that trades out. And next week, more BK trades, Twitter at FXFlow, and I hope the guys see you there.